Hi, I'm Anthony Hohmann, ETF Product Manager here at S&P Capital IQ. And today I'm joined by Todd Rosenbluth, our Director of ETF and Mutual Fund Research. Todd, thanks for being here.
Good to be here, Anthony. Thanks.
2013 was a strong year for equity inflows, specific in the ETF space. Where do you see that heading?
Yeah, so what we saw in 2013 was we saw a lot of growth in developed markets, specifically U.S. equities, and then even in European and Asian equity, or Asian market in particular. What we saw was outflows into emerging markets. And then one of the trends we really identified for 13 that we think is going to continue in 2014 is U.S. sector investing. Very popular, something we think is going to continue as we move forward.
Todd, let's talk about sector investing. Do you think that State Street can continue to accelerate tapping into this marketplace?
We think so. You know, Fidelity recently launched their own sector-based products, and we happen to like some of them. But what we really like about the sector spider products, besides having exposure to large cap stocks that we at S&P Capital IQ like, from valuation and risk perspective, these are very liquid, highly active ETFs with tight bid-ask spreads and still relatively low expense ratios. So we think the sector spiders are going to do very well in 2014 in gathering assets, despite that competition.
There's a lot of buzz around European ETFs. How do you think iShares is positioned to do, considering all its country-specific ETFs?
Yeah, we think actually quite well. You know, they've got diversified ETFs that offer exposure to both developed Europe, you know, on a pan-European level side of things, but as well as the Eurozone. But we really think the country-specific ETFs, like the iShares MSCI Germany, for example, one area where we're seeing strong economic growth and a way to be able to play that. But some countries are going to do better than others, we think, in the European Union, and these country-specific ETFs from iShares really offer a way to get exposure on a tactical level at certain countries, like Germany or France, and reduce exposure to other countries in particular.
Specific to fixed income ETFs, there was a lot of great buzz towards the end of 2013, and flows moved into shorter term fixed income ETF products. How do you see State Street managing that trend?
We like some of the specific products that State Street offers, specifically on the short-term high-yield side of things. SJNK is the spider short-term high-yield product that we have a very high ranking on at S&P Capital IQ. We like the fact that duration is relatively low, under 3 years. We like that it's taking some credit risk on, but it's being managed well within the environment. Expense ratio is relatively low. Bid-ask spread is relatively tight. It's one of our top-ranked fixed income ETFs. We think short-term fixed income is really going to do very well in 2014 as rates are likely to move higher.
So the investor sentiment is early 2014, the Fed will likely taper their bond buying program. How does iShares fare to do with their floating rate products?
Yeah, so iShares has a number of fixed income products. In fact, they're the largest not only ETF provider, but fixed income provider in terms of the number of offerings. We think iShares floating rate, the ticker is FLOT, we think is going to do well both in gathering assets as well as performance. And the reason why is, again, it's protecting you as rates are likely to move higher. The expense ratio on this is relatively low. Bid-ask spread, again, is relatively tight. It's, again, another one of those ETFs that we like from S&P Capital IQ because of its risk-reward opportunities.
Thanks, Todd. Always great to connect with you on the ETF front.